Well, good morning again, everyone. Thanks so much for sharing your morning coffee with me. Before we get into this morning's topic of how much do you really need to save up to be able to retire comfortably, just have a quick look at the market. It's really sort of behaving itself as you would expect. Recently we had rising bond yields here with the 10-year Treasury going up to 3.5%. At the same time that happened, of course, valuations for equities started to fall and the S&P sold off to the point where it was down in bear territory. But recently the bond yields have eased a bit down to only 2.75, and as a result of that, equities, and particularly growth equities, have rallied somewhat. In fact, over the last month, we've got the S&P up by 9%. Over the last week, a really nice week over in America, up 4%. And so right now we're sitting here quite a way away from being in bear market territory, being down only about 14% from the all-time high back here earlier in the year. But if we actually have a look at what's been happening over the last 6 months, it's probably coming up to a really important technical level. Not that I do much technical analysis, but there does seem to be a very important line through there around about that 4,200 mark, where back here it was a level of support for the market. Support was broken for a while, and now it's become a point of resistance, and we're coming right up to that now. But we have got this succession of slightly higher highs, and this is probably a really important level here. If we can break through that, perhaps we might see some more positive momentum going forwards. And that would be good for the Aussie market as well, I suspect. But anyway, let's move on to today's topic of how much do you really need to have saved up to retire comfortably. And of course that's going to depend on what your lifestyle is, what your commitments are, whether you have a mortgage or not, whether you have to rent, and really at what age do you want to retire. If you really want to retire early, then you're not going to be able to access the age pension. So the question there is a bit of a different one from, say, someone at my age. In my early 70s, I've been retired now for coming up 7 years. I've sort of sparked my interest a little bit when I was listening to the radio the other day, and a financial advisor was suggesting that $400,000 would be an adequate amount to be able to set yourself up for a comfortable retirement. Now, the advisor was speaking from Adelaide, and a little bit later we'll have a look at some numbers which pretty much shows that the story for living in South Australia is a little bit different from the story for living on the East Coast, whether it be in, say, Victoria or New South Wales in particular. But anyway, look, if you're going to retire and you're expecting to access the age pension, the full age pension for a couple is $1,488.80 a fortnight, which is $38,700 odd per year, which is quite a lot of money, really, when you consider it, that you're getting it in the middle of you've worked your whole life and paid taxes, and so you may have the view that, well, it's something that I should be entitled to. That's okay, but it does come with some caveats. There is an income test, so if you earn more than $336 a fortnight in income, then that pension does get cut back, and there's also an assets test. You can only have a certain amount of money in assets, and if you have more than that, then the pension does get cut back. Now, in my case, or in our case, my wife and I, our basic living costs, and this is not living comfortably, this is just basically covering all of the things that we absolutely have to pay, is around about $40,500 a year currently. And you'll see here on my little spreadsheet that I always factor in an annual increase. It used to be 3%, but I've just bumped it up to 4%. And the way inflation's going at the moment, probably need to bump it up a little bit more than that. But whatever the case, that's what it looked like at the start of this year. And so we need to get an income of $40,500 to cover all of those things that are pretty much essential for us. Now, we own our home, and so therefore there are some things in here that would not exist if we didn't own the home. So things like the home and contents would be smaller. There wouldn't be an emergency services levy. We wouldn't be paying council rates or water rates, and down here there wouldn't be a maintenance cost on managing the house. But there we are, 40,500, which is sort of around about where the age pension is. But it does depend, as I said, on what your level of assets are. And so let's go to a little calculator that I found online, and we'll pop in some numbers that pretty much describe my wife and I, and then we'll put in that $400,000 as our assets and see what the calculator says about how much our pension would be. Now, the site I'm using here is www.agepensionsolutions.com.au/calculator. Now, I can't guarantee that the calculator is absolutely accurate. I suspect it is, but let's have a look at what's going on here. So we're a couple and we own our home, and so we get a chance to put in all of our data. Now, I've pre-filled this a little bit. As far as our assets are concerned, we've got a couple of cars, probably worth about $7,000 or $8,000 each. So we put that in there. Our home contents, they're suggesting never put more than 10,000, but I can guarantee you we've got things that are worth more than that. You know, I've got quite a number of guitars which are, you know, worth $1,000 to $2,000 each. We've got some artworks and a few other things. So I'm going to put in $50,000 for home contents. We don't have any collections or boats or real estate that we own. Nothing else going on through there. Our bank accounts currently got about $10,000 in there, and that's about it. So let's suppose we had $400,000 in our superannuation fund, hopefully earning us some money, although this year it's gone backwards. But we put that in there, and you come down to find that your total assets as far as Centrelink is concerned is $475,000. Looking at our assessable income, we get this thing called a deemed income. Now, what the ATO or Centrelink or whoever is doing this does is they look at that investment of $400,000 and they deem that it's going to earn us $7,353 in income. Now, when you come down and look under here, you'll see that as far as the calculations are concerned, that total income or deemed income of $7,353 does not impact the pension at all. It's not enough to reduce the pension. But because we own our own home, our total assets here, $475,000, breaches the limit. And because it breaches the limit, then under the asset test, our pension would fall down to $1,320.80, which is, let's just do a quick calculation, is about $34,500. And so therefore, that $34,500 is not going to be enough to cover our basic living needs. Now, of course, the $400,000 that we've got invested is going to be earning, hopefully, some sort of a positive return. It hasn't returned it this year, but, you know, if you could get, say, 5% return on that, $20,000 a year, it doesn't get counted in the income test. If you happen to earn more than the deeming rate, that's all well and good, you get to keep it. And so, you know, if we get 5% return on that $400,000, then another $20,000 on top of the $34,000 brings us up to $54,000. And so we've got a $14,500 buffer there above our basic cost. So I guess, you know, I was a bit surprised. I thought the number might have been higher, but I think the financial advisor is, you know, perhaps pretty much on the mark. But what happens if we don't own our own home? Now, you know, I'm always a believer that owning your own home is a good thing, but, you know, for under various circumstances, because people are moving around everywhere, perhaps with their work, the concept of buying a home and then selling it, buying and selling, is not a good thing to be doing, in my view. And for whatever reason, if you get to retirement age and you don't own your own home, then of course you are going to be needing to rent. And in our case, if we didn't own our own home, then our costs would fall quite a bit, from that $40,500 down to only $32,400. Wouldn't have any need for maintenance, probably should have highlighted that, or pool chemicals. We won't have water rates, won't have council rates, no emergency services levy, and no home insurance policy. And there may be some other things that I could sort of pair off there a little bit, but just ballpark figures, we're going to be about $8,000 less that we need to have for our basic needs. But I need to add on, of course, the cost of rent, and it depends on where you're living as to what that rent is going to be. And so I just did a little bit of buzzing around on REA, realestate.com, for Sydney, and sort of started not too far away from the CBD. Now, I know nothing about these suburbs, but the data is saying that if you sort of live reasonably close to the CBD in, say, Marrickville, if you want to get there, it's going to take you about half an hour to get into the CBD, but you're going to be paying $765 a week in rent. Now, that's just an average or a median, perhaps, coming from REA. Depends, of course, on the size of the house and the quality of the house, I guess. But just getting some ballpark figures here. If you move a bit further out, go to Earlwood. Takes a bit longer to get into the city. You pay a bit less in rent, $695. Go further out to a suburb, Hurstville, 45 minutes from the city, $600 a week there. Now, I don't know why Como is so expensive. It's a bit further out, takes you longer to get into the city. Maybe the houses there are of better quality, I have no idea, but whatever, $735 weekly rent there. If you move further out, 45k from the CBD, you're like an hour and 20 minutes out. Bit of a trip to get in, but you pay less in rent, $620 a week. Now in South Australia, living costs as far as housing is concerned is noticeably less. Like I live in Williston, we're 52k from the city, which is way more than Sutherland, but look at the travel time, it's only 48 minutes. And the average rent for probably maybe say a 3-bedroom house, $360 a week. Now our house is more substantial than that. We're on a very big block, and to be honest, look, if we were to rent our house right now, it's probably more between $600 and $700 a week that you'd be having to pay to rent our house. But these are averages or median figures. Where my daughter lives in Seaton, only 11k from the city, so a bit like say Earlwood, takes you a bit less, 8 minutes less to get into the centre of the city. And the rents are $200 a week less. So we're talking about $10,000 a year there. So getting our head around that, depending on where you're going to be living, and you can have a look at the suburbs that are perhaps near you or where you would prefer to live, but you certainly need to take into account clearly the cost of renting if you don't own your own home. So let's go to the calculator and pop in what would happen if you don't own a house. And so coming back to the calculator, we're just going to change from the couple homeowner to a couple non-home owner. Going to leave everything else the same, cars, home contents, nothing else going on, bank account the same, listed investments 400,000 the same. And when you come down and do the calculation, we've still got the same deemed income, but because now we don't own our own home, under the asset test we're allowed to have more assets, and we end up on the full pension, which is $38,000, around about $38,500. But the problem I've got here now is that is only going to cover the cost of my rent. Let's go back and have a look at that spreadsheet on the cost of renting in, say, those suburbs in Sydney. Depending on where you're living here, the cheapest would be 52 weeks at $600 a week is, a bit over $30,000. And if you're going to be living in Earlwood, around $700 a week, so it's $35,000. And at Marrickville, you're heading up more like 38,000, something like that. And so if you're living in Sydney right now and you're on the full age pension, that full age pension is only going to pay your rent. That's all you're going to get out of it. Now, if you want to live in a 3-bedroom house in Williston, okay, it's going to chew up about half of your pension payment, so it's not quite so bad. But if you're living in Sydney, so if this was me looking at my budget, that $38,000 is going to be chewing up my rent pretty much, and so therefore I've got to be getting $32,400 from my investments. Now, if my investments are only $400,000 and I'm going to say get 5% on that, that's only going to give me $20,000, which is not enough to cover my basic costs So I wouldn't call that living comfortably. There's no holidays there. There's no buying a new car, or there's no, helping out your kids or whatever it is you want to do, going to restaurants, entertainment, whatever. So, I've got a feeling that $400,000 is not going to work for you if you are in Sydney. And in fact, if you go to the ATO website, I think it is, you'll find that they're suggesting a figure of $650,000 is much more likely to be where you need to be able to retire comfortably. So let's put that into the calculator. So we'll change our investments here from 400,000 to 650,000. And when you do that, then certainly you get affected by the asset test. And under the asset test, that tells you now that your pension is going to be $622 a fortnight per person, or $1,244 for the couple. And so that pension payment there of $32,300, it works out to be, is going to cover rent, and you've got $650,000 earning you, say, 5% per year on average, and that's going to return you $32,000 from your investments. $32,000 there, pretty much in line with my basic expenses that I just can't avoid. Wouldn't call that comfortable living, sort of living right on the edge of comfortable, I think. And so I've just got this feeling that maybe 650 is not quite there. Whatever the case, I really do think it's important you have a look at your current position, have a look at your current investments, what your plan is for the future, have a look at where you are in your life. Are you younger, in which case you've got a little bit more wiggle room, but if you're older, you're getting close to that point where you're thinking, well, maybe I don't want to be working forever. Do the numbers. There's a calculator there. I'll put the link for you in the video description. You can play around with your budget. Have a look at what you're earning, what you think the future might hold for you. Really important, I think, that you investigate all of these options and put in some different sort of scenarios. If you think the market's going to tear off at 100 mile an hour, well, okay, things might be very good. But, if you think the market, or at least the investments that you're making, might struggle to get any more than 5% on average return per year, that is going to change your whole perspective on what is a reasonable amount to have put aside for when you exit the workforce. Now, in those particular examples I've just been given, of course, there is always the option for you to do some more work. There's no reason that you can't go ahead and do a part-time job or whatever. And depending on how much you earn, it will impact on your pension if you are there. But all in all, so many things to consider there as you head up towards retirement. So I hope you found the discussion informative. Again, I sort of fluffed around a bit, as I tend to do, but I do appreciate you giving me your time. And of course, if you want to have a look at some more of my stuff, then you can head over to patreon.com/invest for the future. But until I catch up with you again next week, keep well, keep safe, and I hope your investments are going quite nicely for you.